Okay guys, this video is about market structure and I wanted to create an in-depth video about market structure because I wish that when I was starting out trading years ago that I had a simple video to explain to me market structure and the stuff that I will actually use. Unfortunately, most videos online they do give information, but it is cookie cutter information, the same recycled stuff that everyone uses. I wanted to create this video about market structure and how I've been using it for the past years, me the results that it has given me. As some of you may know that I do have a playbook and I do have my own system, and market structure is one of the biggest elements that we use to take our entries. So this video will also be a reference for new members of my playbook. So we are going to start with the very basics, something you've probably heard over and over and over, and that is the higher highs or higher lows or lower lows and lower highs. And that would look something like this, which I'm going to explain now on my screen. So when you have a bullish market structure, you're going to get price printing something like this. You're going to get a higher high, higher low, higher high, higher low, and so on. Now, when you have a bearish market structure, you're going to get the same pattern, but vice versa. So you're going to get your lower low, your lower high, lower low, lower high, and lower low, and so on. So that is something that probably you've heard over and over and over. Now, the next thing we are going to look into is breaks of structure. A break of structure is an indication that the market might reverse. And that would look something like this. So let's say we are printing our higher high, higher lows, higher high, higher lows, higher highs, which means we are bullish. And the price then comes down and closes below the last higher low there. And that is a break of structure, also known as a BOS. So the same way we had a break of structure on this bullish trend here, we can have a break of structure on a bearish trend, which would look like something like this. So let's say you have your lower low, lower high, lower low, lower high, lower low, and then the market comes up and closes above the previous lower high. And that would give us a bullish break of structure. So on this next part, we're going to go over some rules about market structure. And one of the most important rules, when there is market structure, we only consider our candle body closures. What does that mean? So let's have a bit of an example on our charts here. Let's say price came up here and we have a huge wick here. Now, just because the price came up here and the wick, there's a long wick that left a trail here, it doesn't mean that we're going to draw our market structure on that wick. Market structure always counts on the candle bodies, where the candle body opened or where the candle body has closed. So that is the first rule of market structure. We are always looking for candle body closures. So rule number 2, we are always looking at multiple time frames. For example, if I'm trading on the 15, the 5 or the 1 minute time frame, I am always looking at the higher time frames like the 4-hour or 1-hour time frames. And I have to make sure that both time frames are on the same direction. Meaning that if I have the 1-hour time frame that gave me a break of structure, but the 4-hour is still bullish. So, for example, if the 1-hour gave me a bearish break of structure and the 4-hour is still bullish as it is still open, I would need to wait for the 4-hour time frame to close and also confirm my bearish break of structure for me to be able to drop down to the lower time frames and take my entries. And this is also something that is specifically of how we trade on our playbook, and that is the 4-hour and 1-hour time frame are in the same direction. We always make sure that the 4-hour and 1-hour time frame are in the same direction. And this is because, let's say for example, the 4-hour is still open and the 1-hour has printed a break of structure, that can easily be a fake out. So that is why we wait for also the 4-hour to close in the same direction, so we are more confident in taking our trade on the lower time frame. And our third rule is that a break of structure can only happen when the price breaks our previous area of interest. For example, if it is a bearish break of structure, that can only happen if the price closes lower than the previous higher low. And if it is a bullish break of structure, that can only happen if the price closes above the previous lower high. Anything in between is not considered as a break of structure. So we have closures above or below protected level. So to give you a very good example of what I mean by waiting for both the 1-hour and the 4-hour time frames to be aligned, I have created this layout where on the left side you have the 1-hour time frame and on the right side you have the 4-hour time frame. So let me just make that more clear. So on the left side, this is the 1-hour time frame. Let's make that slightly larger so everyone can see. So this is the 1-hour time frame, and on this side we have the 4-hour time frame. So if you look closely to wherever I move my mouse on one time frame, the other time frame is going to show us our crosshairs. So for example, I'm moving up here on the 1-hour time frame, and as you can see here on the 4-hour time frame, it is showing us exactly where that movement was with the crosshairs. And we're going to go over exactly when we had an alignment of market structure. So here we can clearly see that the market structure is bullish on both time frames, so we're creating our higher highs and higher lows. So as you can see here, we have our higher high, higher low, higher high, higher low, higher high, higher low, higher high. That is the 1-hour time frame. And the same goes for our 4-hour time frame. Here we had a higher high, here we had a higher low, higher high, higher low, higher high, and higher low. And as you can see on the 4-hour time frame, the crosshairs on the 1-hour time frame can all see that they are both on a bullish market structure. Now, over here on the left, on the 1-hour time frame, the price came down and closed below the previous high. So let's mark that a bit better. So do we all agree that this was our previous low? Okay, I will mark that. I will change the color to white. So here was our previous low. Even though here we came up and we created another dip, but remember one of our rules that the only thing that counts is actual previous higher low, which is there. Anything in between doesn't count until we get a break of that zone, this protected area. So then the price came down, okay, and closed below this zone on the 1-hour time frame, which gives us a break of structure on the 1-hour time frame. But when we had this break of structure, if you look on the 4-hour time frame, if you can see my crosshair on the right hand side of your screen, that zone is here. So that zone is right there. Now, looking at our market structure on the 4-hour time frame, and we try to look for our previous higher low. Our previous higher low was here. So we know that until the price comes down and breaks below here, we cannot take any trades. And for the members of my playbook, we call this an indecision zone. And you can get more into the indecision zones and so on inside the playbook. But for this session, we are going to stick to strictly market structure. So before the price comes down and closes under this break of structure, and then we have both time frames on the same bearish market structure, there is no trades that we can take. And if you look closely to what happened here, as soon as we got that break of structure on the 1-hour time frame, and maybe some people would just jump the gun and enter, look what happened. We got a pullback, and that is where you get smoked. If we just waited for our 4-hour time frame to also give us the same confirmation of the break of structure, look how beautiful the price would have moved. We would have then got this massive move. I'm not saying this is an entry model, but for the members of the playbook, they know what I'm talking about, and we would have banked pretty heavy on this move going down. In fact, I believe we have done that. And we took quite a nice trade on the playbook. So guys, that is my session for today. I hope you found it informative. If you have any questions or you want any further information, please don't hesitate to DM me, and I'll catch you on the next one.